What is going on, Pulse family? Welcome back to the channel. Look, have you ever felt like there's a hidden playbook for the next monster crypto rally? Well, I've been digging, and I think I've found it. Today, we're going to connect the dots between some pretty scary Wall Street headlines and what could be your crypto future. All I ask is that you absolutely obliterate that like button and subscribe so you don't miss what's coming next. All right, let's get into it.
Okay, so it all kicks off right here. This is not just some random headline. This is a massive bombshell from Goldman Sachs, one of the biggest players on the planet. I mean, just let that sink in for a second. We're not in an official declared recession, but the job market is weaker than it's been in half a century. Now, yeah, on the surface, that sounds awful, right? And for the economy as a whole, it's definitely a huge red flag. But for us, for those of us in the crypto space, this warning sign is the key. It might just be the first domino to fall in a chain reaction that leads right to our next supercycle.
I know what you're probably thinking. Okay, man, weak jobs, bad economy, got it. But what in the world does that have to do with my crypto bags? And that, my friends, is the million-dollar question. The answer is actually incredibly simple, because believe it or not, we have seen this exact movie before. You know that saying, history doesn't repeat, but it sure does rhyme? Well, right now, history is practically screaming at us from the charts.
That's right. The last epic bull run, it wasn't some random fluke. It left behind a literal treasure map for us to follow. It was a really simple three-part story. First, the government faced a massive economic crisis. Second, they fired up the money printers and created trillions of dollars out of thin air. And third, they sent a big chunk of that cash directly to the people. And what did a whole lot of people do with that money? You guessed it, they bought crypto. We are about to walk through that playbook, round by round, because the conditions are setting up for them to run the exact same play all over again.
So let's hop in the time machine and rewind to 2020. The whole world was grinding to a halt, fear was absolutely everywhere, and in response, the government fired up the money printers like we have never seen before. Over the next year or so, we got 3 huge rounds of stimulus checks sent right to people's bank accounts. And let me tell you, these weren't just economic lifelines, they were pure rocket fuel for the markets.
Let's start with round one. It's late March 2020, and those first $1,200 checks start to hit. You got to remember the vibe back then. The stock market was in an absolute free fall. Every chart you looked at was just a sea of red, and panic was the only thing on the menu. But then, all of a sudden, millions of people get this fresh injection of cash, and they didn't just see it as a lifeline. They saw it as a once-in-a-generation buying opportunity.
And boom! Just look at that. The impact was immediate. Before those checks started rolling out, Ethereum was beaten down, trading at around $132. The second that stimulus money hit the system, it was like a starting pistol went off. Within about a month, the price shot up to $207. That is over a 50% gain, almost overnight. The connection couldn't be more direct. It was undeniable.
All right, now let's fast forward to round 2, December 2020. By this point, the market was wised up. Investors had seen the movie before, and they were ready. They knew what happened the first time, and they were just waiting for the sequel. So when that second, smaller check of $600 was announced, the market was already front-running the pump. Everybody knew the playbook.
And what do you know, lightning struck twice. Ethereum was chilling around $385. The checks go out, and bam, another insane surge, this time blasting the price straight up to $600. That's another 50 to 60% pump in just a few weeks. The cause and effect was crystal clear. Government money was flowing right into crypto and sending prices to the moon.
And then came the grand finale. Round 3, March of 2021. This was the big one, the largest check yet, $1,400. I mean, by this point, the market had seen the pattern play out twice with perfect precision. The fuse was already lit from the last 2 rounds, and this final, massive injection of cash was the ultimate rocket fuel. It kicked off the most explosive, most parabolic part of the entire bull run.
So let's zoom out for a second and just look at the whole picture. If you had understood this playbook, if you had bought Ethereum right before that very first stimulus check hit at around $132, and you just held on through the chaos, you would have seen it soar past $2,700. That is a mind-blowing 20x on your investment, all sparked by government stimulus. It's just absolutely wild.
Okay, so that's the history lesson. The data is there, it's clear, it happened. But that was then. The real question, the one that matters for us right now, is, are we about to see a repeat performance? Is the government getting ready to dust off that same exact playbook and run it all over again?
Well, the evidence is definitely piling up.
And it's all pointing to a big yes. We've got this convergence of really powerful forces all coming together to create a potential perfect storm. You've got the weakest job market in 50 years, you've got the Federal Reserve basically telling us they're planning to cut interest rates, you've got the growing threat of AI taking jobs, and you've got the immense political pressure of an election cycle coming up. Any one of those is a big deal, but all of them together, that could be a hurricane.
And hey, if you need more proof, don't take my word for it. Just look at what the financial markets are predicting. This data comes straight from the Fed rate tool, which tracks what the smart money is betting on. And it is showing an almost 100% probability of multiple interest rate cuts by early 2026. The takeaway here is simple. The market is convinced that cheaper, easier money is coming. And historically, an environment with easy money has been incredibly bullish for risk assets like crypto.
So here's the bottom line. This isn't just some wild guess. It feels like a deliberate setup. I really believe they're already testing the waters, priming the public with all these alarming articles about the job market to build their justification. Now, they're not going to call it a stimulus check this time. That name is tied to inflation. No, they'll rebrand it. They'll call it a jobs check, or a middle-class tax credit, or maybe even a tariff refund. But don't get it twisted. It's the same playbook, just with a different cover.
So, what can you actually do with this information? How do you get ready? The key is not to wait until you see the checks announced on the news. By then, it's too late. The time to prepare is right now. Step 1. Map out your strategy. Decide which assets you think have the most upside. Step 2. Do your own research. Go back and look at how different cryptos performed during the last stimulus pumps. And Step 3. If and when all the signs are pointing in the right direction, you invest with conviction based on that research.
Look, we all know the deal. Past performance is no guarantee of future results, of course. This isn't 100% certainty, but what we do have is a clear historical playbook, a bunch of flashing economic warning lights, and political motivations all lining up. The stage is being set, and the government is warming up that money printer. The only question left is, are you going to be ready for it?
You do not want to be the one on the sidelines watching this potential opportunity fly by. If you learned something today and this brought you some value, do me a huge favor and pay the channel tax. Don't worry, it's free, by absolutely smashing that subscribe button. We are building a community of informed winners here, and I want you to be a part of it. Thanks for tuning into Crypto Pulse. I'll see you in the next one.